Hi and welcome to Investing 4.0 Visionary Investing in Future Trends. As promised, we'll take a look at Xiaomi today. And Xiaomi is a big Chinese tech company and the fourth biggest smartphone manufacturer globally. If you are new to my channel, welcome. Investing 4.0 stands for quality and non-hyped content. So if you want to get deep stock analysis and a deeper understanding for evaluating companies, you are at the right channel. Obviously, this is no investing advice and is for information and entertainment only. So please always do your own research and make your own investment decisions. As always, we'll take a look at the history, the business model, and the financial situation and finish it off with the opportunities and risks and an outlook. But now let's begin and have a closer look into Xiaomi. All right, let's start with the name. What does Xiaomi actually mean? Xiao means small and Mi means rice. So in the end, it means small rice grain. It is running under the ticker symbol XIACF or 1810.HK on the Hong Kong Stock Exchange. The share price is currently around 29 Hong Kong dollars and the PE ratio is about 45. Xiaomi has a market capitalization of more than 700 billion Hong Kong dollars. And the estimated revenue for 2020 is between 260 and 270 million Hong Kong dollars. And Xiaomi currently has no debt, which is quite a good thing. All right, let's take a look at the history as well. Now, Xiaomi was founded back in 2010, so 10 years ago, by Lei Jun, the current CEO, together with 7 additional partners as a software company. In the early stages, Xiaomi developed an operating system for Android devices called MIUI, which was mainly focusing on basically design, so you could buy UI themes and apps to make Android systems more fun, more usable, more design-friendly, whatever. For example, you could use their software to make an Android phone look like the iOS, the user interface from Apple. This potential of functionalities created a big fan base among tech enthusiasts who actually began to ask for hardware designed by Xiaomi. So they were convinced by their software side and were asking for hardware. So only 1 year later then, in 2011, Xiaomi released the first smartphone called the Xiaomi Mi 1. And it was a high quality for a cheap buck and therefore the perfect device for the target group. The first smartphone sold out immediately and without any spendings on marketing or other ads. It was basically just mouth-to-mouth propaganda that spread via apps like WeChat and other social networks in China. Then in 2012, Xiaomi was able to build on the previous year and was known for delivering the best hardware for the cheapest price. And today their slogan actually is making high-quality technology accessible to everyone. The fan base can be compared to what we actually know from Apple, and that's what happened back then in 2007 with them already, or with what we see today with the Tesla fan base in the EV market. A lot of hyped fans telling their friends and families about their phones. That's basically what's happening with Xiaomi right now. In their third year of operations, their revenue almost grew to $1 billion, so pretty impressive for a back then very young company. In 2013, Xiaomi's evaluation already reached about $10 billion, and it started to expand to countries like India, Vietnam, Thailand, Russia, and many, many more countries. And they sold their third generation of smartphones, the Mi 3, almost 19 million times. Then in 2014, diversification kicked in and Xiaomi decided to offer more devices, not just smartphones, and extended their product range by smart speakers, power banks, intelligent lights, electronic toothbrushes, vacuums, and much more. They started to focus on all household devices that could benefit from the Internet of Things. In 2017, they extended their global expansion and they tried to conquer Europe, starting with product launches in Spain and soon began to pop up so-called Mi stores all across Europe. So they're basically trying to follow something that Apple is doing with the Apple stores and also what Tesla is doing with their stores in the different cities. Then in 2018, they had their IPO on the Hong Kong Stock Exchange in July. And now, 2019 and present, Xiaomi is basically copying a lot of strategies and is trying to build a similar image like Apple, but with one big difference, and that's the price point and the product range. They managed to become a strong brand and to create and maintain actually a hype among their customers and fans. Today, Xiaomi made it on the global Fortune 500 list and has more than 1,000 stores worldwide, and as already mentioned in the intro, became the fourth biggest smartphone manufacturer with more than 300 million active monthly users. So now let's also quickly talk about Lei Jun, who is the current CEO of Xiaomi and one of the founders as mentioned. He is often considered as the Steve Jobs of China. And in fact, he actually read the biography of Steve Jobs as a student, so in his early years. And he also adopted a lot of strategies and ideas, like, for example, building an exclusive brand where customers are not just customers, but fans, and using exclusive and limited offers to promote products and also like big live events for releases that we see with Apple and Tesla. What I appreciate most, though, about Lei Jun is that he seems very open and honest. For example, back in 2019, so last year, Xiaomi did not actually meet the sales targets, and the revenue was predicted to climb about 30%, but in the end it was just 16%, so 50% lower than what was estimated. And he publicly admitted that he tried to grow the company too fast and too aggressively, and that he did not seem to have the hurdles and problems in his mind back then. So he took responsibility here. What I also like to see is that he actually currently holds about 30% of the company's shares, so he's personally involved and is also therefore depending on the success of the company. Now let's have a closer look at their business model and what makes Xiaomi so interesting. As already mentioned, Xiaomi has the slogan of making high-quality technology accessible to everyone. But is their main business model actually really focused on hardware? Let's take a closer look here. To make it simple, you can divide the business model into two different pillars, hardware and then software. Let's talk about the hardware first. Lei Jun said that every customer should have the possibility to own an excellent smartphone. Especially in China and Asia in general, having a good smartphone is one of the most important status symbols. Whereas in the Western part of the world, we still show our wealth through cars and houses, and smartphones are just a nice addition to that. In Asia, the focus on this is a little heavier. As iPhones are really expensive for a big part of the population considering the average income, Xiaomi is trying to target the middle class here and basically trying to give them technology that is sexy. And to make it simple, having the latest technology is therefore more sexy than an expensive iPhone with lower specs. With a combination of a push for innovation and a set profit margin of 5%, Xiaomi can deliver specifically that. So they have a very cheap price point, but great technology here. Now, 10 years after the founding, Xiaomi is presenting the 10th generation of smartphones, so they're trying to deliver one smartphone per year. And the Mi 10, which is the current version, is offered in different versions as well. And they also have two additional brands, the Poco and the Redmi phones, as sub-brands. And the Poco phones, for example, are focusing on the Indian market and are also being promoted as made in India. The Mi phones are more on the high-end to premium side, whereas the Redmi and the Poco phones are a little cheaper. And by the way, Xiaomi does not really make money with the Redmi and the Poco phones, so the margin there is really going to 1 or 0%. It's really tight. Now, the global smartphone market actually is pretty much stagnating since 2015. Everyone has at least one smartphone, and people usually don't switch platforms that much, like from iPhone to Android, which creates a high pressure on the smartphone market among the big players. So I don't expect crazy increase in smartphone sales. But as mentioned, they also launched many additional products. In Europe, they focus on the main products like smartphones, TVs, wearables like smartwatches, and so on. And in Asia, their products, or in China specific, their product range is way bigger, as they offer smart washing machines, vacuums, fridges, cameras, and even rice cookers and so on. So many more household devices. So from the hardware side, everything is pretty easy to understand, I guess. We understand their products, and I think most of us own a smartphone or like a fridge and anything else. Might not be a smart fridge yet, but we know how those devices work. But now you basically might ask yourself, why is Xiaomi hyped so much from the investor side right now if they have such a tight profit margin and the products are basically kind of easy to copy as well? The short answer is they focus on the big trend of Internet of Things, IoT, and the 5G technology is boosting this. 5G, which comes with like high bandwidth and a super low energy cost, makes it possible to connect almost every device with like a small battery with the internet. And Xiaomi even developed smart pillows that can basically measure how you sleep. In the end, everything and all of our habits can be tracked if we want to. A smart heating system could see when you are actually coming home on your way home and start heating up the apartment depending on the distance, how far you are away from your home. And yeah, as you can see, the smartphone here becomes an integral part and can access all of these information and even steer certain things that are needed. And yeah, this market, the IoT, the Internet of Things market, is projected to grow about 30 to 35% per year. And Xiaomi is really trying to position themselves here as a big player. But let's be honest, if you compare Xiaomi to Apple or Samsung, we see that Xiaomi is still very, very small. Let's take a look at the other side. So in addition to hardware, Xiaomi also generates revenue with their software and services. And this is mainly ads and pre-installed apps like games, like streaming apps and so on. So they get money from, let's say, Spotify, which probably is not on the Asian market, but they get money from those apps to be pre-installed. One of the big benefits from Xiaomi compared, for example, to Samsung is that they have their own operating system, the MIUI, and the generated revenues actually go straight to Xiaomi instead of going to Android. And these revenues are currently growing with about 24% per year, so way more than the growth of the revenue from the hardware side. But it's still below the expected return from the IoT products with 35%. So the business model can quickly be summarized as follows. Xiaomi is selling high-quality smartphones and devices at a cheap price point and basically pull their customers into their own ecosystem. The more devices you own, the higher the switching costs for the customers, and Xiaomi then charges you for additional services like games, streaming, and so on, and can recommend you more of their products and services by analyzing the data that you generate. But this also brings us to one of the main differences to other companies. Xiaomi is literally spamming their customers with ads, but more on that later when we talk about the opportunities and risks. By the way, if you like the video so far, please help me out by liking this video. That's really much appreciated from my side. Let's have a look at the financial side of Xiaomi now. The revenue is continuously growing with about 32% in the past years, and it's about to grow about 27% for the upcoming years. At least that's the projection. Let's play around with these numbers in a minute when we take a look at the DCF model. And yeah, let's see what happens if we change this assumption. Looking at the global market, Xiaomi actually makes 44% of the revenue in the international market. And that means that 56% are generated in China. And that they actually, that's important to know, haven't even entered the US market because of the trade war that we see right now. One thing to mention that is really impressive, if you ask me, is that Xiaomi entered India only 4 years ago, so the Indian market, and they already are the number one in this market. So within 4 years, they became the biggest smartphone manufacturer and the biggest brand that is known for smartphones over there. When we look at the revenues, we can divide it into 3 categories. The first one is obviously hardware and the second one is software, but we can split hardware into 2 categories. So the first hardware category is phones and TVs, which make about 60% of the revenue. And then we have the other devices like vacuum cleaners and so on. And that is, I call them IoT devices, so Internet of Things devices. And they make about 30% of the revenue currently. Services and ads only make 10% of the revenue. Now, the big question is though, is Xiaomi a hardware company or a software company? Looking at the revenue, it looks like a hardware company, but let's take a closer look. The hardware segment is only growing with 5 to 10% per year, whereas the services and ads are growing about 25% per year, and the IoT devices or the IoT business segment is expected to grow with about 35% per year, and in fact even grew about 42% last year. So let's check the profitability to get an answer to our question here. So when we look at this, the services and ads make 45% of this, the IoT devices only 31%, and the smartphones only 24%. So as we can see, smartphones, which make about 60% of the revenue, only have 24% profitability. Considering the growth within the three segments, Xiaomi can actually be viewed as a hybrid company with a strong focus on software. The hardware is just the vehicle here, and we can basically compare it to the good old printer business, where companies like HP, Brother, Epson, and so on didn't actually make money by selling printers, but by selling the cartridges or the ink. So looking at the EBIT as well here, that tells us that Xiaomi is not really consistently profitable yet. The tight margins definitely put a high pressure on the company as well, and small variations in sales actually have a high impact on the overall profitability. On the upside, Xiaomi has no debt, as mentioned in the very beginning, and they currently have more than 8 billion Hong Kong dollars cash on hand. The prediction is that they will close the year with a PE ratio between 45 and 50, which is okay for a company with such a high growth rate, if you ask me. But since you know that the PE ratio is not the best number to consider when it comes to fast-growing companies, let's take a look at the share price using the DCF model instead. The model is based on the numbers from the last 5 years, and I consider 10% of WACC, or weighted average cost of capital. That's the minimum that I want to create. I created 3 different scenarios to see what a fair share price would be compared to today. The first scenario assumes a growth of 15% for the first 5 years, and then 10% for the next 5, and 7% after 2030. And it's a very pessimistic or conservative scenario. The profit margin stays at 5. And in this scenario, the share price would be 16% too high, and the fair share price would actually be around 24 Hong Kong dollars. Now, the second, let's say the medium scenario, assumes a growth of 20% for the first 5 years, and then 15% for the next 5, and 7% after 2030. Here, the share price would be undervalued by 30%, and the fair share price would be about 37 Hong Kong dollars. In the last scenario, the positive one, we assume the predicted 27% growth for 5 years, and then 20%, and then finally 7% after 2030. And we also assume that they manage to increase their profits from the IoT and service businesses, so that after 5 years, their margin grows to 7%. This would bring us to a fair stock price of about 86 Hong Kong dollars, which would be about 200% upside potential. So as you can see, it really all depends on your belief if the company can consistently grow with more than 20%. If you don't believe this, an investment into Xiaomi might not be the best decision for you. And by the way, as a little benefit here for you, I added the link to this DCF model in the description of this video, so you can download the file and play around with the numbers and scenarios yourself. On the third side, or on the fourth page sheet at the bottom, you can also see the financials that I downloaded from WSJ.com. We are almost done, but of course there are always some opportunities and risks, so let's take a look at them as well. Let's start with the opportunities. Xiaomi is focusing heavily on the IoT, the Internet of Things market, and has high growth potential here. They are among the leaders in the segment and could actually highly benefit from this. They have their own ecosystem, which makes customers stay, and they do have similar fan base like Apple or Tesla, so it's really fans instead of customers. They focus on growing markets like China and India, which itself is a big opportunity if you ask me. As they focus on high tech and quality, I expect further innovations from their side. But of course, there are some risks as well. Xiaomi is literally spamming their customers with ads, as mentioned. The question is, are they willing to bear with this ad spamming, or will they actually switch as they have more options, for example, to buy an iPhone as mentioned, and discover that actually their time is more valuable? And once customers start complaining about this, the whole business model might be at risk if you ask me. As mentioned, the tight margins create additional pressure for Xiaomi, and if we see some drop in sales, we have a high impact on their profitability. Last but not least, as we saw when looking at the different scenarios in the DCF model, the current investors are already pricing in a higher growth perspective. So at this price point, if the growth is weaker than expected, the price might drop easily about 30% or more. So what is my summary after analyzing Xiaomi in detail? I will currently not buy Xiaomi stocks, and it doesn't fit to my current investment strategy as well. It has potential, quite frankly, and I really believe in the IoT business, but it also comes with great risk that, in my opinion, are not unlikely, at least in the short term. However, if you really believe in the IoT and you are a long-term investor, then Xiaomi might be the right company for you. Looking at the current price though, I would probably use the savings plan and make use of the dollar cost averaging effect here. What do you think about Xiaomi? Let me know down in the comments below. I'm really excited. I would like to see how many of you are actually investing into Xiaomi or are considering investing into Xiaomi. Now, there's only one more thing to say. If you like this video, please help me to beat the YouTube algorithm by liking this video. And of course, don't forget to subscribe if you want to get more great content like this. I see that most of you haven't subscribed yet, so that's your chance now. Well, that's it for now from my side. I'm out. See you next time.